right? So we know that the market closes on a day-to-day basis at 10 p.m. This is UK time, British summertime, BST, British summertime. Night before, 10 p.m. Your preparation phase is more important than your execution phase. You have to know what you're looking for. You have to know why you would want to be looking for it. 6 to 7 a.m., right? If you're working 9 to 5, you're likely to be up at these timings in here. You only need to spend 15, 20 minutes at the chart. That's all you need, okay? That should then define how you're looking for the day ahead. Okay, 6 to 7 a.m., 15 to 20 minutes at the chart. You've already done the night before. So the night before is looking at those daily candlestick closes. So if I was looking at Euro USD, and this was last night, let's do it on a blank chart. This is why swing trading can really work for you if you are working a 9 to 5, because this is slightly set and forget. So if I was looking at this before, here's my market structure for the Sunday. Right, how did the weekly close? Well, price action is looking very, very bearish. I do not want to trade against this trend right here. There might be intraday positions if you're at a more advanced level or you can spend more time at the charts. By all means, yes, you can trade. But if you are 9 to 5, if you have jobs, if you have places and family and things you have to do, trade with the trend. So I've already defined from a second looking at the chart that this market has the possibility to trade lower. We have space that the market can run into. The price action is looking bearish. Daily time frame. Now looking at this price here, I could say, okay, well, we closed here. I am not trying to sell the market at the lowest point that it's made, ever. We are always selling when others are potentially greedy and buying when others are fearful. So what does that mean and how does that translate? Well, we want the market to pull back up. You can always and should always expect a retracement on a market, whether that's intraday or whether that's daily or whether that's weekly. You should always and should expect some form of retracement. So I've defined that I'm trying to sell this market. I know that from a Monday, Tuesday perspective, we could see some retracements. Now let's understand where the liquidity is. Liquidity is above old highs, equal highs, or an accumulation of areas where we've retested. Inefficiencies are ranges that we haven't been traded into evenly. You can see that this price action in here was the only delivery of price in a singular direction, which means markets often want to use that as an attraction point. Now, if I was you, I would sustain on 1 hour and 4 hour time frames if you have a 9 to 5. Okay, we are looking for very specific reasonings as to why we're trying to enter a trade. Now, for me, we call it points of interest, right? POIs. Now, if I'm just going to stick to the 4 hour point of interest or anywhere around that time zone, 6 hour, 3 hour, 4 hour, 2 hour, this is where my preparation phase comes in, and this is where you can start to set kind of your limits and your orders that are in play. All right. So if I was looking at this market in here, something like that, I can then set my limit at that piece of price action. Because we trade candles, because we trade raw price, there's no constantly having to look at your phone for a crossover or a trend line break or anything like that. We use the exact price points. So you could say, right, okay, cool, well, Euro USD, here was my point of interest, my last buy to sell movement before we made a new low. Here's the liquidity above this high. I know that I'm set for price to trade up into here. And the reason we're confident in that is because we have a definitive reasoning as to why the market would want to go back there and why the market would want to reject there. This was order flow being stimulated in order to sell it. So they are currently buying the market to free up enough liquidity to sell it to now provide a mitigation point. They never want to come out in a loss. So this is now where liquidity is provided for. We can trade up into a point of interest. Is it valid? cleared liquidity, traded higher than the last points before dropping. So yes, 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 and yes. So that's how I would do it. Every night, see how the market daily closed. What's the daily close like? What's the weekly close like? How can I get into retracement areas? Pre-assess or pre-align those retracement areas, and then have the specific entry reasoning as to why you're taking that trade. Okay, I won't lie to you. Yes, there are times working full-time jobs where it's slightly more difficult. It is. But don't worry, because the skill set isn't going anywhere. The markets aren't going anywhere. Different assets might come into the market. You know, in 10 years' time, they might all be digital currencies that we trade. But trading's been around since the beginning of time. It was rice for chicken back a day. Now it's just currency for currency. Trading is always going to be presented in the same way. Supply and demand. Simple supply and demand, right? Right, one's cool. Sorry, remember that. My next session, I will be live on Tuesday with Mauricio. So it's Mauricio's session that I go live with him. That's live trading. Okay, we do live trading. So we try find opportunities. Obviously, sometimes there is not always the opportunity there and then, but we use 5-minute time frames and we look for intraday 1 to 3s, 1 to 5s. Once I've established trending bias, market liquidity, having a little trouble matching the narrative with a time and price. Okay. Cool. If I can just do this visually. So there's two things here. This may go over some people's head, but for your questions particularly. So time and price, this is how I line it up. I'm probably getting in trouble for teaching too much, but Asia. Right? Asia often creates highs or lows which we can use for the day ahead. Now that's going to be between 12 and 5:30 a.m. I use that. Okay, so what does that mean? Well, the market might go ahead and make a high, make a low. Now, if you've defined the narrative, right, let's say you're trying to buy this. Let's say it's Tuesday, okay? So here was the high, maybe at 2 a.m. in the morning. This might have been the low at 4:30 in the morning. Price is then sustained ranged, coming into, obviously, your London session. Right, there's your London session. This is now where we've seeked liquidity. Now, often what you want to see, if your narrative is bullish, there's an understanding as to why price would want to go higher. What we want to see is potentially price spike this liquidity here, then run the opposite way. And you'll often see this. During the London session out of Asia, you will often see liquidity get spiked, price run the opposite way to your narrative. Then that is when we're searching for points of interest to trade into. Then that is the entry for us to trade higher. Okay? So Asia, we often look for the highs and lows that can be created within the narrative. We often want both sides of liquidity to get ran. If not both sides, at least the sell side liquidity to get ran in order to go higher. New York is often continuations. Right, so if we're in New York, and let's say London's already made, let's say London's ran this way, then this is where New York can sometimes come involved. We start moving away in here, and then that's where we might get this little 5-minute play that we look for on Mauricio sessions. All right. So that's how we define narrative.